I was just looking at what Wall Street is doing right now. The S&P and the Nasdaq are in the green. The Dow marginally in the red. And this even as the Fed Chairman Powell has hinted at a smaller rate hike in December. And of course, we are seeing developments in China where they're going easier on those COVID protocols in the light of all the protests that have been taking place. So one was expecting Wall Street to move up and rather smartly at that. But for the moment, we're seeing at least the Dow marginally in the red. Meanwhile, Joe Biden, the American president, is saying that taming inflation is going to take time. So that statement, in consonance with what we're hearing from the Fed Chair Jerome Powell yesterday in that speech that he made, is something that we're going to be watching and assessing more closely as Wall Street plays along. Meanwhile, we're looking at Dalal Street as well. The bulls continue to be in charge. The Nifty, the Bank Nifty, the Sensex have hit fresh intraday record highs again today. The Nifty declining 70 points from the kind of highs it saw in the day, but it held on to the 18,800 mark, staying above that and continuing its rally for the 8th straight session on the trot. The Bank Nifty, an underperformer though, it's ended 270 points off the day's highs. It settled quite flat at the end of trade today. Sectorally, we saw the IT index. It turned out to be the top sectoral gainer, and it rose around 2.4% in trade. The markets have been rallying, December now upon us, and this is what we're asking. Is this the time to stock up? Over the past 5 years, the Nifty has given these positive gains in 4. On the show, we try to understand how to maximize our returns on investments. This Christmas, this December, is what we want to know from our guests as well. And these are market veterans we're talking about. Dilip Bhat is joining us along with Mahantesh, Sabarad, the independent market expert, also on the show on India Tonight. Welcome, gentlemen. You know, as far as the markets are concerned, Mr. Bhat, in 16 of the 22 December months that we've been looking at, the Nifty, the index, has delivered positive returns. I don't know if there is a science to it, and you can tell us if there is, but how confident are you of good positive returns by the Nifty this December? Will Santa's bells keep jingling through the holiday season, in your opinion?
Well, I think the statistics have their own way of proving things right or wrong.
Yes.
So without getting into the merits or demerits of that, I think by and large, it is very clear that overall the market seems to be loaded in favor of the bulls without any doubt. I think the way the FIs are also behaving, it looks like gradually they are also coming into play in a very serious way. But having said this, I think overall our equities certainly are not at a cheap valuation. They are very reasonably valued. At times, it may look a little bit stressed without any doubt. And looking at overall economic parameters, which I would say is mixed, but largely in favor of India, I think from the current levels, it appears that on the higher side, the market appears to be capped without any doubt, in my opinion. I may be completely wrong on this, but I think somewhere markets look a lot more expensive. So I would say that yes, one should be invested, but not be in a hurry to buy in this particular market. There will be enough macro factors at play, particularly as what we are seeing, what is playing out in the last couple of days. The US, the sound bites on the US interest rates, inflation, and some of these things are acting in concert to give the market the push to a new high. So I think all these things are being playing out. But I would still not be in a hurry to buy in this market. But yes, stay invested.
Stay invested, but wait and watch a little bit is what you're suggesting. As always, there can be many twists in the tail, as it were, Mahantesh. Any good story is going to have, these pitfalls. Somehow we don't like stories that have a linear graph. So what in this case do you see as prospective villains? Because Mr. Bhat has just pointed out the expensiveness of some of these stocks right now. And you can tell us whether you see pitfalls for the rise of the Nifty, the kind that we've seen. Is this going to continue through December, in your opinion?
So, partly the villains in the market could be potentially linked to the slowing growth of corporate profitability. The underlying economic growth also is slowing. We are reaching somewhere the peak of the growth rate right now, currently, when it comes to the look at the cyclicity. And then we are also not yet finished with the interest rate tightening regime as yet, both by the US as well as the Indian RBI. So as interest rates rise, demand growth could be tepid, and you will have underlying corporate growth in profitability slowing down. This could be the villain in the piece as far the markets are concerned. And then you have certain sectors who have been not doing relatively well. Take leading sectors such as the pharma sector, take the automobile sector. They have been displaying very weak kind of top line growth. Forget the profitability growth. The top line growth is relatively weak coming or even after coming off the lows of the COVID that we had seen. So my sense is that while the overall market is very buoyant, you will see situations arising out of slowing profitability of corporate growth coming in, and
Yes.
that's the only villain in the piece.
Sure, fair enough. Mr. Bhat, with commodity prices softening all around, not least of which, of course, crude oil, which will be the stocks and sectors to watch out for in December in terms of gains? Will they emerge from the beta stocks, the broader markets, or do you see the multi-baggers elsewhere?
So, well, I think what I would say is I would try to look much beyond December.
Okay.
So I think the white goods segment is something where they have taken it on the chin for several reasons. Inflation also being one of the reasons, and commodity price rise, which we had seen, has also taken a hit on the profitability of the sector. But white goods sector, I think, is something that one can think about. That's a sector which is likely to benefit because of the lower commodity prices. I think automobile sector also can be a beneficiary on this particular count. But by and large, I think the question is how sticky this inflation is going to be for next year. And we have already seen a huge inflation in the current year. And if there is some moderation of inflation, that too also may not turn out to be all that great in news for the Indian economy and for the purchasing power of the mass Indian community. So I think overall, I would say that it is still going to be a mixed affair. I would still like to look at pharma. I think pharma for next 2 quarters is not going. I think is continue to be under stress in terms of their performance. But that's a sector which I would like to look at it from
Defensive
medium to
sector.
long term perspective.
So you're saying right now is still the time to be defensive. Mahantesh, would you agree or would you kind of buy into the Indian growth story that everyone is talking about? The consumer sentiment still being strong. Of course, it's festive time. How do you see FMCG discretionaries do? And since we talked about commodity prices, how do, some of these infrastructure-related stocks, cement stocks, for example, how do you think they are likely to do? Would you buy into them at this stage?
So the commodity inflation coming down overall does benefit the FMCG companies a great deal. That boosts their margins quite a bit, and it also offers room for them to bring in various kinds of promotional offers that could boost potential demand. So of course, inflation coming down is a positive. Commodity inflation particularly coming down is a positive for the FMCG sector. As far as cement stocks that you talked about, we are entering into the peak season for the cement companies. Summertime is the time when cement companies see a spurt in demand. And if it is accompanied by lower commodity costs, so particularly on the energy side, we would see the cement companies post better margins and together with volume growth. That's something been a bit of a that's something which has been missing so far, at least for the past few odd months. So commodity inflation coming down could trigger a growth in profitability for FMCG companies, profitability for commodity dependent companies like cement companies, and should favor a rally in those stocks.
Then, Mr. Bhat, if we had to put a gun to your head and ask you about the Nifty and whether or not you think it'll scale 19,000, I want to ask you where you see it at the end of the year.
Well, we are almost at the end of the year, if you mean by the calendar year.
Calendar year.
So I think 19,000. Yes, I think it's very much possible. But one cannot rule that out because when you build up a momentum, the way the momentum can take you to a level which becomes a little more. It comes in a very unpredictable zone to predict that kind of a thing. But yes, 19,000 looks within the range. The question is, how much beyond 19,000 is it going to sustain? So there, in that way, I would prefer to play it a little more cautious, and I would, as what I said, I would still wait and watch. And if there's a gun on my head, I would still say that at best I would spread out my SIP in an extremely gradual way, not in the normal way.
So be cautious is the word that we are getting, both from Mr. Dilip Bhat and Mr. Mahantesh Sabarad, both market veterans, experts who've seen many rises and many falls in the markets. And of course, the kind of phenomenal rise that we've seen that beats the kind of universe that we see, our global peers and how they've been doing in recent times, that does beg a certain amount of questions, and certainly questions that should be answered by you at an investment at a portfolio level. Thanks very much for joining us on this discussion, Mr. Bhat and Mr. Sabarad.
Always a pleasure.
Thank you. Thank you.